Good afternoon, viewers, and welcome back. And this time I'm going to discuss about returns in the context of GST. Now, obviously, the first concept is why returns, that is, purposes of returns. Now, first I'm discussing purposes of returns. Firstly, mode for transfer of information to tax administration. Secondly, compliance verification program of tax administration. Thirdly, finalization of the tax liabilities of the taxpayer within stipulated period of intimation to declare tax liability for a given period. Fourthly, providing necessary inputs for taking policy decision. And lastly, management of audit and anti-evasion programs of tax administration. Now, obviously, in the next case, who needs to file return in GST regime? So, in order to answer this, every person registered under GST will have to file return in some form or other. A registered person will have to file returns either monthly, that is in case of normal supplier, or quarterly basis, that is supplier opting for composition scheme. An input service distributor will have to file monthly returns showing details of credit distributed during the particular month. A person required to deduct tax and persons required to collect tax will also have to file monthly returns showing the amount deducted or collected and other specified details. A non-resident taxable person will also have to file returns for the period of activity undertaken. Now, a normal registered taxpayer having aggregate turnover in the preceding or current financial year more than rupees 1.5 crores has to file the outward supply details in GSTR1 in relation to various types of supplies made in a month, namely outward supplies to registered persons, outward supplies to unregistered persons, that is consumers, details of credit or debit notes, zero rated, exempted and non-GST suppliers, exports and advances received in relation to future supply. Now, the next question that will come, do taxpayers with an aggregate turnover less than rupees 1.5 crores also need to file GSTR1 on a monthly basis? The obvious answer is no. A special procedure has been prescribed for such taxpayers by notification number 15/2017, Central Tax dated 15 November 2017. Such taxpayers need to file GSTR1 on a quarterly basis. It is also clarified that the registered person may opt to file Form GSTR1 on monthly basis if he so wishes, even though his aggregate turnover is up to rupees 1.5 crores. Now, next question that is coming, is the scanned copy of invoices to be uploaded along with GSTR1? The answer is no. Scanned copy of invoices is not to be uploaded. Only certain prescribed fields of information from invoices need to be uploaded. Now, next pertinent question, whether all invoices will have to be uploaded? The answer is no. It depends on whether B2B or B2C, plus whether intrastate or interstate supplies. For B2B supplies, all invoices, whether intrastate or interstate supplies, will have to be uploaded. Now, question will arise, why so? Because ITC will be taken by the recipients. Invoice matching is required to be done. In case of B2C supplies, uploading in general may not be required as the buyer will not be taking ITC. However, still in order to implement the destination-based principle, invoices of value more than rupees 2.5 lakhs in interstate B2C supplies will have to be uploaded. For interstate invoices below rupees 2.5 lakhs and all intrastate invoices, statewide summary will be sufficient. Now, next pertinent question is whether description of each item in the invoice will have to be uploaded. The answer is no. In fact, description will not have to be uploaded. Only HSN code in respect of supply of goods and accounting code in respect of supply of services will have to be fed. The maximum number of digits that the filler will have to upload would depend on its turnover in the last year. Now, next question that is coming in our purview, whether value for each transaction will have to be fed. The answer is yes. Not only value but taxable value will also have to be fed. In some cases, both may be different. In case there is no consideration but it is supplied by virtue of Schedule 1, the taxable value will have to be worked out as prescribed and uploaded. Can a recipient feed information in the GSTR2 which has been missed by the supplier? Answer is yes. The recipient can itself feed the invoices not uploaded by his supplier. The credit on such invoices will also be given provisionally but will be subject to matching. On matching, if the invoice is not uploaded by the supplier, both of them will be intimated. If the mismatch is rectified, provisional credit will be confirmed. But if the mismatch continues, the amount will be added to the output tax liability of the recipient in the returns for the month subsequent to the month in which such discrepancy was communicated. Now, next question is, does the taxable person have to feed anything in the GSTR2 or everything is auto-populated from GSTR1? While a large part of GSTR2 will be auto-populated, There are some details that only recipient can fill, like details of imports, details of purchases from non-registered or composition suppliers and exemption, non-GST, nil GST suppliers, etc. If invoices in GSTR 2 do not match with invoices in counterparty GSTR 1, then such mismatch shall be intimated to the supplier. Mismatch can be because of two reasons. First, it could be due to mistake at the side of the recipient, and in such a case, no further action is required. Secondly, it could be possible that the said invoice was issued by supplier, but he did not upload it and pay tax on it. In such case, the ITC availed by the recipient would be added to his output tax liability. Rather, in short, all mismatches will lead to proceedings if the supplier has made a supply but not paid tax on it. Yeah, that's well.